Now, Nielsen says manufacturers and retailers seeking to stay one step ahead in Africa's complex markets need to move beyond business as usual. Ailsa Wingfield, Executive Director for Thought Leadership Emerging Markets, joined CNBC Africa to shed some recent insight on the African consumer and how countries rank. Let's talk about some of the key highlights of the Africa Prospects Indicator, the API. Now, you say that Sub-Saharan Africa last year in 2016 was able to lift itself up from the 20-year low, growth low it recorded last year. Now, how are African manufacturers and retailers positioning themselves to take advantage of this renewed growth?
So I think, as you say, we're seeing a slight turnaround in terms of the economic prospects that we're seeing across Africa. And when we look at that from a manufacturers and retailers point of view, what we're seeing is that manufacturers obviously realizing that they have to change their tactics to adapt to the times. So we've seen manufacturers and retailers rethinking how consumers are shopping, the fact that they might need differentiated offerings or more available products or products that come in different packaging and formats to meet those altered consumer circumstances as they struggle to operate and to survive in these higher inflationary environments. But we're certainly seeing an easing of pressure, and we're certainly seeing that businesses are seeing a turnaround in terms of the prospects from that point of view, and are looking to better growth prospects as we look ahead in the next 12 months.
Now, in Sub-Saharan Africa particularly, if you look across the markets, especially a market like South Africa and even a market like Nigeria, with the population, consumer population, we have a population of over 180 million people. I mean, it would appear that the ingredients to have a successful consumer market, at least for the retailers and manufacturers, is already there. So I'm just wondering, what are those major issues? Because you've talked about the fact that these manufacturers, these retailers need to begin to think outside of the box and not do what they did previously, expecting to get better results. So what is it that, what is the main issue, and what is it that these retailers are still not doing?
So I think, I mean, some of the more successful manufacturers and retailers are the ones that understand that they truly need to dig into and understand consumers' needs. And those might not be the same as what you see across other emerging markets. So we truly across Africa and within countries within Africa, whether it's Nigeria or South Africa, Ghana, we truly need to understand that the different consumers have different needs. And that means understanding how they live on a day-to-day basis. And in tougher times, typically, how do they react or how do they change that shopping behavior? So it might mean that they're shopping more frequently because they're earning less money on a day-to-day basis and they can only afford to top up on products on a day-to-day basis. So it might mean smaller packaging sizes or products which are able to meet a consumer's currency denomination value in terms of what they might have to spend. It also means that I think that we need more differentiated products. And like I say, certainly a product which might have been successful in another emerging market, whether it's another African market or another emerging market across the globe, doesn't necessarily provide the passport to success in markets across the continent. We absolutely have to understand that consumer circumstances, that their needs, their taste preferences in terms of the products that they consume, how they consume them, and their day-to-day lives might be different. And I think certainly the manufacturers and the retailers who acknowledge that and truly understand those differences and are able to adapt their product offerings, not only in terms of the product itself, but perhaps even in terms of the packaging and the price points, in terms of how they make those products available to consumers, are the ones who will be more successful in terms of surviving not only the more tougher times, as we've seen in the last year or so, but certainly the ones who look to a longer term horizon as well and develop products specifically for consumers' needs across the continent are the ones who are going to be more successful in terms of tapping into that growth.
Okay, so are you saying that there isn't enough innovation?
Absolutely. I think innovation is the key to this. Those manufacturers as well as retailers who are more innovative in terms of developing products specifically for consumers' needs in individual markets across the continent are the ones who are going to be more successful. But certainly that also means that we need to be, I say, a little bit more purposeful in terms of understanding consumers and how they shop, and then innovating to bring the right products to consumers across the continent.
Okay, for consumers, for retailers, businesses who are looking to the continent perhaps for the first time, or who are also looking to re-strategize, apart from the usual heavyweights like South Africa and Nigeria? I mean, this report also looked at some other countries. You did a comparative analysis on 8 countries. So we've seen the likes of Cameroon, Cote d'Ivoire, Ghana emerging. So what can you tell us about these smaller markets that are small but still obviously hold value to would-be investors?
So I think absolutely that. We certainly can't overlook the big powerhouse economies of South Africa, Nigeria and Kenya as well, but there are a number of other bright spots that we need to be looking out for as well. And sometimes those are the markets which are easier to execute in or to bring new products to. So certainly Cote d'Ivoire appears there and has been on top of that list in terms of the overall Africa prospects indicators, providing a fertile environment because we have got consumers which are opening to trying new products. It's about making sure that we're able to fulfill those demands of consumers in a market like Ivory Coast. We've also seen Ghana rising to the top of the list. So as the economic environment has improved and we've seen deflation coming through now, we're seeing a very positive environment for manufacturers and retailers in Ghana to bring new products there. We're seeing a turnaround in terms of the sales of overall consumer goods. And then there are also markets like Cameroon. So for the first time, we've seen Cameroon rising on that list of overall Africa prospects when we look across the economic, the business, the consumer and the retail environment to understand the source of those prospects. So certainly Cameroon is one that's appeared on that list for the first time in terms of rising up as a prospect. I think the consumer and retail environment in Cameroon provides some big opportunities. There's certainly some obstacles to overcome in terms of the ease of setting up business to be able to serve those consumers and attracting investors to meet those consumer needs in that market. And then we've seen Tanzania as well, which features third on that list, which has also provided a very stable and attractive environment. We also see the likes of Ethiopia. From a business prospects point of view, a lot of businesses recognizing and acknowledging the opportunities which exist in Ethiopia and keenly looking at that market to invest in and bring new products to serve consumers in Ethiopia.
You know, some might argue that how these retailers and manufacturers succeed, whatever the strategies are, is also tied to the economic prosperity of the country they found themselves in. A country like Cote d'Ivoire, for instance, one of the fastest growing in sub-Saharan Africa, GDP growth of at least 7%. You know, some might say that, yes, there's 7% growth, that maybe that would increase their chances of success. A country like South Africa, Nigeria, growth of not more than 2%, that might be a big hindrance. So for you, how do we tie those two together? Having good economic prospects or GDP growth, tying it to how much, to what extent these retailers will succeed. I mean, given how this GDP, this growth impact on key variables, especially consumer spending.
And I think that, that's certainly a really important indicator because what we've seen is, let's take the tougher economies like South Africa and Nigeria, which in the last 12 months, as we know, 12 to 24 months, have certainly experienced a lot of turmoil in that economic environment. But what we do see is that regardless of that, it doesn't mean to say that we're not seeing opportunities for growth in those markets. And we've certainly seen that there are opportunities for growth. There's pockets of growth if we're getting the offerings right for those consumers. It might mean adapting those offerings to make sure that we've got more affordable offerings during those times where consumers' wallets are strained. But we are certainly seeing that there are some of those highlights and those bright spots there. It's also about making sure that it's not only going back to staple ingredients or discretionary items. We need to understand what changes in that mix for the consumer in terms of what they might be purchasing. So we're certainly seeing that there are still categories, both in Nigeria and South Africa, which are achieving growth even in certainly tough economic times. And then in those climates where we are seeing higher economic growth, certainly means that there's more opportunity there. But it's about not only looking at the economic growth, it's about understanding consumer openness, the retail trading environment, and whether we've got all of those factors lining up to be able to meet consumers' needs. So certainly in markets, even though we see Ivory Coast at the top of that list and higher economic growth, and certainly on the radar for a lot of businesses, it doesn't mean to say that we're yet achieving, I think, the full growth potential that there is. Because when we look at the consumer prospects in Ivory Coast, what we're seeing there is a lower ranking on the consumer prospects, because I think the consumer fulfillment and meeting consumers' needs hasn't been truly met yet. So I think the growth potential there is even higher in terms of what we could see from retail growth there if we're getting the products right for the consumers in Ivory Coast.
Absolutely. But overall, generally, for all of the markets, the investors, do you think that they're spending enough time, money and energy in trying to really understand consumer needs and what the consumer actually wants and how consumer needs continue to change and evolve? Do you see them spending the required amount of money? I know it varies in doing market research, for instance, consumer spending research to know just exactly what the consumer needs and how their needs are changing so that they can, know how to tailor these products. If they're going to be innovative, they need to know what their customers want. So do you see that happening?
So I think it's certainly changing and it's growing. It's probably not where it should be, and I think there certainly is more opportunity to understand consumers' needs because, again, and understanding individual consumers within each country and not, as we talk about an African consumer not being an African consumer, we have to look at individual consumers within markets. And I certainly see there's definitely been continued investment in consumer insights as well as measurement of that performance, but certainly we need to see a whole lot more of that. We sometimes see when we have a look at a combination of local manufacturers versus global manufacturers, is that local manufacturers are often closer to consumers in terms of understanding those needs and a little bit more agile and flexible in terms of adapting or bringing products to meet those needs. Where certainly global manufacturers as well might have had particularly successful products in other markets, which they might look to bring to markets in Africa, but may need to adapt them slightly to make sure that they are better suited to markets. Overall, we're definitely seeing that in tougher times, we need to use more information, more data, and more knowledge to be more successful. In terms of understanding which retail outlets to be in, it's about greater optimization and efficiency and using information to understand where to be, how to price the products, to truly understand those consumer needs, and then how to innovate, particularly for those consumer needs. So we certainly see that growing, and I think we'll continue to see that growing well into the future as we see more and more success from products which are brought truly based on consumers' needs in Africa.
That was Ailsa Wingfield, Executive Director for Thought Leadership Emerging Markets at Nielsen.